Ever pondered how businesses fund their operations? Or why understanding financial capital is crucial for any business student, entrepreneur, or investor? Well, today, delve into the world of financial capital and discover the common methods businesses use to obtain it. Financial capital, in its simplest form, is the money needed to run a business. It drives operations, funds innovations, and fuels growth. But where does it come from? Let's explore. Businesses can access financial capital in several ways. One method is early-stage capital, also known as startup capital. This is the money needed to get a business off the ground. It often comes from the business founders themselves, friends, family, or angel investors. For example, consider a budding entrepreneur who has a revolutionary idea for a new tech gadget. They might pool money from their savings, solicit funds from friends, or pitch their idea to an angel investor to secure their initial capital. Profit is another source of financial capital. Once a business is operational and generating revenue, it can reinvest its profits back into the business. This is often seen in successful restaurants or retail stores that open additional locations using the profits generated from their initial establishment. Bonds and bank loans are two other methods of obtaining financial capital. When a business issues a bond, it is essentially borrowing money from investors and promising to pay it back with interest. A bank loan, on the other hand, involves borrowing money directly from a bank and repaying it over time with interest. The key distinction here is that bonds are obligations to multiple investors, while a bank loan is a commitment to a single entity. Stocks provide another avenue for businesses to gain financial capital. A stock represents a share in the ownership of a company. When a company issues stock, it is selling a piece of itself to raise funds. This is often done through an initial public offering, or IPO. The money raised from selling stocks can be used to fund operations, invest in new projects, or pay down debt. It's important to understand that not all companies can issue stocks. Public companies, those that are traded on the open market, can issue stocks and bonds to raise funds. In contrast, private companies, those owned by a small group of individuals, cannot sell stocks or bonds to the general public. In conclusion, understanding financial capital and the methods of obtaining it is crucial in the world of business. From early-stage capital to profits, bonds, and stocks, these are the lifelines that fuel a company's operations and growth. The strategic choice between these sources of financial capital can significantly impact a company's future. So, whether planning to start a business, invest in one, or simply looking to expand your business knowledge, remember these key points about financial capital.